Good morning and many thanks for joining us on Morning Markets from True Potential. Today I just wanted to look at how equity markets had performed yesterday given that we had the US holiday, but then also look into the UK unemployment data from today, which is important from an interest rate policy perspective from the Bank of England. So just looking at how equity markets performed yesterday, we continue to see a good performance coming through from the UK market, and that really builds on some of the momentum that we've seen over recent weeks. Key driver yesterday very much related to M&A, that common theme that we've been talking about impacting UK assets in the UK market over recent months, where corporate buyers are definitely seeing value in UK assets. So we saw a bid yesterday, or a rumoured bid I should say, for GSK's consumer goods business from Unilever. Also interesting just to note how share prices reacted to that. GSK, GlaxoSmithKline, a positive share price reaction, a slightly less favourable reaction from the Unilever share price. So maybe something to read into that, how Unilever shareholders are thinking about that potential or rumoured transaction. I think just looking at bond and currency markets, really little change to discuss there, and that's really just a function of the US being closed for the Martin Luther King holiday. Looking then to this morning, we've heard from the ONS in the UK, giving us data in the employment market through to the end of November, and really it continues to paint that picture of continued improvement in the UK employment situation. And just remember, that's in contrast to many of the expectations that we heard as furlough was coming to an end. There was a concern about the direction of UK employment. Well, actually, it's continued to come in favourably. 3 months to the end of November, the unemployment rate was 4.1%. And that really speaks to that continued sign of strength in the UK employment picture. It's also really highlighted by the very high level, indeed the record high level of vacancies in the UK. So we've talked about this in the past, how it had gradually been ticking up. It's now sitting at 1.25 million job vacancies in the UK. And that's really, I suppose, speaks to the strength, but also the challenge that that's presenting for businesses. Where is labour going to come from? Are we going to have to see an increase in wages to tempt people back into the labour force? And indeed, the participation rate has yet to fully recover to pre-COVID levels. So we've seen employment improve, but not, particularly the older workforce, not coming back into the employment market as fast as maybe had been expected. So something to continue to monitor, but really important from the Bank of England's perspective, what's happening in the wage market and also what's happening on inflation. We get inflation data tomorrow, so certainly two important data points this week for the Bank of England to reflect on. And just really then turning to Asia overnight, just one thing to comment on there. George mentioned yesterday that we would hear from the Bank of Japan this week, or today indeed. No change to their interest rate policy, but one notable change, first time since 2014, they've increased their inflation expectations, albeit from very low levels in contrast to that 7% that we discussed last week in the US. Japan moving from 0.9 to 1.1% today. I'll leave it there, but please do join us again tomorrow. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.